so in love with you.
Welcome back to Real Estate Mindset. So today's video is going to be absolutely bonkers. It's on the price cuts that I believe is coming to us this fall. So everyone knows we're in a toxic seller's market, but it's a little bit hard right now to see what direction the market is going because there's so many different factors that are at play in our housing market, essentially changing the direction of it. So what I'm here to say is coming this fall, we are fixing to see a massive surge in price cuts for home sellers, and the fear of missing out is going to switch from a buyer's market into a seller's market. So essentially what we're going to do today, you guys, is we're going to deep dive into a few different subjects because I want to show you guys why I think coming this fall, we're going to start seeing a surge of price cuts. Now, first of all, we have already seen in some areas, only a few areas, price cuts. But today we're going to look at median home price correction or real estate corrections as far as historically. So we're going to take a look at the last 10 years of the housing market. The second thing we're going to look at is the massive equity surge that I am telling you is going to happen from this point forward. So we're going to see all three sources of that. Then we're also going to take a look at the massive interest rate surges and then see if that actually leads to a recession, to see where we're at with the massive surge of interest rates, because as you guys know, affordability is the strongest thing in affecting the housing market right now, just like inventory. So inventory and the massive unaffordability that's going on right now are the two biggest factors that is weighing on our housing market. Now, we're going to end deep diving into a possible recession. So we're going to take a look at the 2 and the 10 treasury yield because it balanced out, okay? So essentially a few weeks ago, it inverted, and I showed you guys that on this channel through a video. The 2 and the 10 inverted, but it reversed once again. But what I'm saying is the same old story with the 2 and the 10. So we're going to look at where the 2 and the 10 is again, and we're going to see if it's likely to invert one more time, causing a recession. Now, you guys understand that I have been predicting that a recession is going to be the catalyst in this housing market that pops this housing market bubble. But always remember, you guys, I'm not a financial advisor. I'm a YouTube opinion sharer. I'm a realtor in Houston and a loan officer in Texas. And if you could, please like this video, you guys. Subscribe to my channel if you haven't already. And as always, comment. We're going to jump into the first thing right now that I want to show you guys, which is essentially the last 10 years of our housing market and essentially the price corrections that have happened. Because remember, what I'm saying is noticeably coming this fall, we're going to see a massive surge in price reductions from the sellers. Take a look at this graph right now. Okay, guys, so this is Fred Economic Data, the median sales price of houses sold for the United States. So we're way up here. This was the massive surge here. So we're going to have a correction with this massive surge here. This surge here is why we're in a housing market bubble. I repeat, this surge here is why we're in a housing market bubble. All right, but let's look at the last kind of correction. So that kind of took place, you guys, in Q4 of 2017. And basically dropped down into Q2 of 2018. And what I want to point out just right here, there was a 6.5% housing market correction, right? So there is already a correction in the last 10 years, but take a look at this correction as well. So this one starts Q3 of 2008 and ends in Q1 of 2019. So this correction, 5.4%, right? So what do you think this correction is going to be up here? I'm thinking it could be a 15 to 20% correction for this massive equity growth right there. And that's why I'm saying, you guys, coming this fall, we're going to start seeing that massive inventory price reduction surge that I've been telling you about. Now, like I said, you guys, overall, I can see, an average of being a 15%, possibly 20% equity loss across the nation. But it's really important to point out different housing markets, different areas, right? So different areas are going to have different effects from all of the turbulence right now in the housing market. But you guys remember what I'm saying? There's so many factors going on right now that are pushing the housing market in certain directions. It's hard to see that. But what I'm trying to do is provide that clarity. I'm saying fall this year, price cuts. Now, that's the price corrections. I think the corrections are actually going to start, like I said, this fall. But let's move on to the next thing right now, which is obviously the massive interest rates surging. Take a look at this. Now, you guys, I went back to 1980s on the Fred Economic Data 30-year fixed rate mortgage average in the United States, because I wanted to essentially show you that these surges right here, this surge right here in 1979 essentially led to this recession. This gray vertical line essentially is representation of a recession. So this massive spike here, boom, triggered a recession. And look at right here as well. This massive spike here in interest rates, boom, led to a bad recession right here. So essentially, you guys, what I'm saying is also, it's likely that, and I've been forecasting this, that in 2022, we start our recession, right? So I believe we're going to start the recession, and I believe we're going to start that recession in Q3 of 2022. And I believe that's going to be more evident because remember this, you guys, remember this very carefully. May and June, the Federal Reserve already came out and said they're going to raise potentially in May and in June the federal funds rate 50 basis points each meeting, which essentially should once again have the interest rates skyrocket. Maybe the average interest rate will be in the 6s or even 7s, but historically, when they surge so quickly, so fast like that over a short amount of time, it leads to a recession. So remember that massive interest rate surges, they're essentially turning the economy off, right, to battle the inflation. So that's the number 2 thing why I think in this fall, we're going to start seeing so many price reductions. Now let's go to the third thing, a massive inventory surge. So I got to quickly take you guys through the 3 areas of massive inventory surge. And the first one I want to show you guys is existing listings coming to the market. Take a look at this graph. Now, a lot of you guys that have been watching my channel have seen this graph before. This is the Fred Economic Data Housing Inventory New Listing Count in the United States. What I'm here to show you is basically, look, in 2017, the listings peaked in May and June, right? Look at May and June of 2018, 2019, May and June, right? In 2021, May and June. So what I'm essentially saying is our inventory and listings are actually going to start skyrocketing from here on out because, again, you guys, historically, we're entering into the months with the largest number of inventory coming on the market, even if people have a low interest rate. But look at this other area of inventory right now. So again, you guys, now this is the 10-year outlook for new privately owned housing units authorized in permit issuing places. So these are essentially new home builders. Look we're at pretty much a historical high of new home builds going on right now at over 1.8 million. So as we go on through 2022, I'm telling you, part of that 1.8 million in houses being constructed over new builds is going to start flooding to our market, right? So we're going to have that massive surge from the new home builders as well moving forward into 2022. You're starting to see why I'm saying once we hit fall, all of these things are going to start showing clear effects in our housing market. But look at the third place we're going to get inventory right now, foreclosures. And as you can see, foreclosures have just started again. So as of January, we had 32,000 foreclosure starts. In February, 25,000 foreclosure starts. And here's the thing, you guys, that's not going to be a ton of inventory at first, but it is going to start surging because there's no more double-digit equity growth. The fact that we have any foreclosures in this market is mind-blowing to me because of the massive equity growth. No one should be going into foreclosure, but they are. So we're going to have so much surging of inventory right now that we're really going to start seeing those effects in the fall of this year. Again, you guys, mark my words on that. So now what I want to do, you guys, is show you an economic indicator that essentially is going to start ringing the alarm once again that we are headed to a recession. Now, remember what I'm saying. All of these factors are going to start showing massive effects starting in the fall. But I believe all of this is going to be drug out into 2023, possibly into 2024. Because again, like I'm saying, it's really hard to see the direction of where the housing market is going for a lot of people, especially if they're emotional, right? But take a look at the 2-year and the 10-year treasury right now. Tell me what y'all think. So as you guys can see, the 2-year right here and the 10-year kind of reverse course. The 2-year is now under the 10-year. So when this 2-year of 2.7, when that exceeds the 10-year of 2.9, that is an indicator of a recession. And a few weeks ago, we saw our first inversion of the 2-year and the 10-year. But recently, there's been a big difference in the 2-year and the 10-year, but that has been shrinking once again. And look at this. Already the 5-year is back over the 10-year again. And this is as of April 24th, you guys. The 3-year is only 2 basis points away from inversion. Right now, the 2-year is 20 basis points away from inversion. So essentially, you guys, there is writing on the wall, and you guys need to pay attention, especially if you want to buy right now. But if you guys are freaking out, if you're, the sky is falling, you're not going to be able to buy a home because interest rates are going up, historically low inventory, calm down. The housing market goes in cycles. And I hope that you can really listen to what I'm saying. And again, this is just my opinion, but come this fall, we're going to start seeing all these effects. So if you're waiting, just wait a little bit longer and take pride in that. take confidence in your decision to hold out in the housing market. Anyways, you guys, I hope I gave you some insight. As always, I'll have all of this information to this data in my description. So by all means, go out there and find out for yourself. Keep watching your local market, keep saving money, keep out of consumer debt, keep building your credit, keep loving your family. And if you're out there investing in real estate, I wish you luck and I hope you win.